You may have to fight a battle more than once to win it. Margaret Thatcher. I tell you, the Iron Lady speaks to us from the past. Stick with this, my friends. Don't worry about your difficulty in mastering the market. I understand it sounds very simple. All you have to do is estimate correctly whether the market's going up or down, the particular stock, the ETF. It's not as easy as it first would seem. Seems like a binary decision, doesn't it? And the charts help you determine through what's occurred in the past how to disintermediate exactly what is going on, separating the signal from the noise, helping to figure out if things are going up or down. Now, the more you do this, the more you practice, the better you will get. And if you will institute, in particular, our use of nothing but these little profit and loss bands, the red and the green areas, we go over here to the measurement tools, and we use the long position and the short position. If you're going down, of course, the short position. If the ETF's going up, the long position. And it helps you use the average true range to deal with the volatility and to figure out what your loss limit needs to be, and then double that for your profit margin. And over and over and over again, you will find that if you can just be right 4 out of 10 times and limit your losses, if you adjust the size of your trade based upon volatility, and you get out if the trade's not working, you will find that over and over and over again, when you have stocks and ETFs that are chartable, it will work for you. Just try it. Prove it to yourself. Each and every day, 10 to 15 minutes, that's all we ask. Let's jump into these charts. Welcome back. Markets were closed in the States for the Juneteenth holiday yesterday. Open today, we see stocks are up. S&P 500 up 5.52%. Did that change the half-day chart? Did we go from red to green? No. And even if we did, we would not jump into an up move, because why? We're below the 200 EMA. That's one of our rules. This golden line tells you go short if you're below it, go long if you're above it. Why? Because it shows you the mood of the market. When the market goes below that, you're looking for short trades. It just gives you one more advantage to trade with the trend. Another one we have is our success multiplier formula, where we check where we are on the half-day wave. That is red and down on the STC. We look where we are on the 2-day. That is red and down on the STC. And we look where we are on the weekly. That is red and down. So what does that mean to us? It means that we're a negative 15 and we're below the 200 EMA. So we're only looking for short positions. And if you will, again, practice what we talk about, you'll see over and over again that just short positions are your best bet for catching the right move with a 2 to 1 reward to risk ratio. So again, give it a shot. Try it each and every day. Practice it. So we see that the S&P's up. That's great. That gives us potentially another opportunity for us to go from red to green, and then to jump back in when it goes from green to red, because we still have all that downward weight. Now, if the market just keeps pushing up and goes above the 200 EMA, we recalculate everything. But it's not difficult. It's just a binary decision, my friends. Keep it simple and straightforward. If you want to win Occam's razor, we apply it constantly. If you make things complicated, they will break. They won't work. Let's go on to the Nasdaq 100, up 2.33%, and were you guys watching? It went over green in the morning, which is great. Things, again, rotate back over. It could give us the opportunity to jump into a down move. So, same thing. We're 15 on the success multiplier formula, negative 15 down. We're below the 200 EMA. Stocks have been below that, both the S&P and the Nasdaq, for many weeks now. So we're looking for down trades. We'll continue to watch, wait and see as things develop. What about 20-year bonds? Where are they? Well, they are green when it comes to the STC. We had a down move today, 1.70%. What are we looking for on this? Well, we're waiting for that STC to rotate over, going down. We're below the 200 EMA. How are we on the 2-day? 2-day is red. That happened last week, moving down. And we look at the, weekly. And of course, it is red, and it is strong red. Look how far we are in bonds below the 200 EMA. That's the weekly. That, of course, represents 400 weeks. That is a lot of downward pressure. So we'll continue to keep our eye on things. One thing I will note for you is you notice we're not reaching the lows yet of the prior week. We look at the 2-day, same there. So again, pay attention. We'll keep an eye on things and see how the week continues to track. And if we have a rotation over going down, that would give us an opportunity to jump into a down trade. Let's move on to gold. Gold was down just a little bit for the day, 0.37%. And when we look at gold, of course, we're below the 200 EMA. We are in the green here. Before things rotate over, of course, we want the STC to go above this middle sort of grayish band you see in here. You see these lines. Again, we want to always initiate our down trades from above that and our up trades from below that. So we would like to see the green continue to move up and then rotate over going down, give us a better feel for a stronger and more likely ability to capture a down trade on gold, which would of course mean shorting gold via puts. There really is, in gold, there's no good inverse ETF that's liquid. There is GDZ, but it is highly illiquid. It's just too much of a difference between the bid and the ask, and I'm not going to take that risk that you don't even cover that. So that is just not an option for us. So we'll wait and see. Again, if you want to learn how to practice trade options, we've got a great 3-part training options made simple the charting wealth way available for free to our Patreon supporters. And any of our 3 levels of support, give us a shot. We would so appreciate your help and support of what we bring here to you for free each and every day. We look at the 2-day on gold. It has punched down. The wick has blown below it and then moved up above it. So giving us some hope. Gold may start moving up strong sometime in the future. This is what the weekly chart looks like, and you can see the weekly chart in gold has really just sort of been, sliding along this level right here, and that is good to see. I'm happy to see that somewhere in the 170 mark, and again, still downward pressure there, but the weekly is above the 200 EMA. So I'm hoping gold is poised at some point to take off on the upside. Can't wait till that occurs, because I, my friends, am going to be jumping in with both feet if and when the charts show me that. I hope that you're practice trading gold and learning its emotions, how it trades, what it's all about. If you're not practice trading these things and eventually getting into some fractional trades with small dollar amounts, you're just not going to have a feel for the personality of each of these individual ETFs and your favorite stocks if you're not spending 10 to 15 minutes each and every day and practice trading them when the opportunity presents itself. That is where we are on gold. Let's go back to the half day. And lastly, we'll go to Bitcoin. Bitcoin up a little bit for the day. That doesn't look like much when you look at even the half day chart. Man, you can see where it just hammered down over the last several days. It was up 1.65%. Didn't seem to make much of a difference. We're down, of course, on the STC on the half-day chart. 2-day chart, we're way down. Weekly chart, we are way down. Again, lots and lots of downward pressure on Bitcoin. We'll continue to keep an eye on it. When it turns around at some point and gives us an opportunity to jump into it, of course we will be practice trading this, as you have seen us do in the past. What I love about the VanEck ETF Trust Bitcoin Strategy Fund is that it is an ETF. You can buy it at any of your favorite online brokers. And when Bitcoin starts moving up, the nice thing is it's traded. You don't have to go to some exchange, some type of crypto exchange that may or may not be having liquidity problems or other issues, you can just buy and sell the ETF. Easy enough to practice trade, easy enough to fractionally trade. I mean, look, at a price of 20 bucks, again, that's easy enough for you to practice trade with a share or two as things start to turn around. Or, I'm sorry, when they start to turn around. A lot of people are saying when and if. I'm going to be a positive guy. I'm going to believe it's going to happen. It just may be a while. And for me, I don't really care one way or the other. If it does, great. If not, I got plenty of other stocks and ETFs I can trade each and every day. That is where we are, folks, as we end the day on Tuesday, going into Wednesday, again, shortened trading week here in the States. So happy to have you back with us. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.